Hello and welcome to The Business. Today I'm joined by Sandro Forte from Forte Financial. How do you do, Sandro?
Good, Graham, thank you.
Good. Now, you look at the financial side of things for people that have got money. How much money do you need to have, though, to get someone like you on board?
Well, we started the business in 1996, and it would be fair to say we were a very general independent financial advisory firm at the time. In 1991, through a chance meeting, which I guess we'll come on to discuss, with a very well-known celebrity, I realised that there was a great opportunity at what I call the top end of the market, you know, the very wealthy individuals, sports stars, celebrities, entrepreneurs. But even today, we've not lost sight of our roots. So the answer, very simply to your question, is we will do anything for anyone. I know it sounds as if we're, pitching our wares at absolutely the whole marketplace in the UK, but we still have a client base of some 3,000 clients, ranging from, individuals that are just starting out in life, have very little, probably it might be some debt management, right the way up to, £10 million plus investment portfolios. So we look after a very wide range of people.
So, for an example then, if I had a business, it's doing reasonably well, I've had stuck in my bank now for a year, £20,000 in credit, and I think to myself, why can't I can't put that into my business just yet, but I would like to park it with yourself. Is that an amount that you would be interested in, or are you more high-end than that?
No. We're out, Graham, to help anybody, whether it be individual, entrepreneur, business owner, high net worth, low net worth, because very often a lot of our high net worth clients have started off, that's a very classic profile of an individual that may have started a business or maybe at a stage in their development where they want to take the next step. Some of our very best clients have started off as clients who really had nothing when we first met. So it's about a journey. It's not necessarily about picking and choosing clients just because they've got more money than someone else.
Yeah. So I've got my £20,000 and I'm looking around for someone to invest it with.
Yeah.
First of all, what if I gave it to someone, like yourself, what guarantee should I be looking at? Because I don't want to give my £20,000 to someone and then them not be there tomorrow and I'm looking around for my £20,000. I'm not suggesting for a minute that's something that you would do, but if I was going to invest that money, what should I be looking for to guarantee that that ain't going to happen?
I think there's a number of things, really. Number one, there are a lot of different investment vehicles out there that range from rock solid 100% guaranteed funds, so typically cash bank accounts, and there are derivatives of that as well. So you might be looking at onshore, offshore, because obviously the tax regime is important. One way to improve returns is to reduce tax liabilities where and if possible. Then it's looking at the risk profile of the individual. So if it's simply a place to park some money to get as big a return as possible with capital security, then we're simply trying to negotiate the very best bank account deposit rate that we can achieve for somebody, and in whatever investment vehicle that might be put is a completely different discussion. But beyond that, it's more about reducing risk. If the client accepts, for example, that at the moment inflation is something like 3.5%, 1.5% return on your money creates a real loss of 2%. And one of the things that I try to do is educate people as to that issue, because a lot of people think that if they're getting a 1.5% return, they're okay because their capital is appreciating, but in real terms it's depreciating. So then it might be a discussion, if it's possible, to have around risk profile. And for a lot of people, the word risk is a terrifying word. They think it means loss of capital, it means going backwards financially. Risk isn't about that at all. Risk can be very, very carefully managed, and it's possible to achieve 8 to 10% a year returns, and we've achieved that fairly consistently for clients without taking very much risk at all. It's about asset diversification, it's about regular reviews, regular servicing, something that most financial advisors, I'm afraid, don't do, and I include the banks in that. Most people are looking to sell products and services. Once they've collected the money on behalf of the client, they stick them in a standard fund or one particular asset class, and the next time you see them is either when the investment comes to maturity, when the client retires, or when they've got more money to invest. I mean, you've had experiences like that, I'm sure, and I guess most of the business members would do too.
Well, I suppose the thing is as well, Sandro, that with investments, things change. So I know we keep harking to the £20,000, but it's just a really nice figure to chat about. So if I gave you my £20,000, it's important that sometimes I might need that back again, and say to you, Sandro, business actually isn't going very good. I need 10 of that back or 20 of that back. So you would have to tailor it then, would you?
Yeah, one of the things that we spend a lot of time doing, Graham, at Forte Financial is we very often will have 2 or 3 meetings with a client long before we even get into the area of giving any advice. One of the other things that we do, which is fairly unique, we will give that individual or business a report and give them the opportunity to A, get a second opinion, B, go off and transact the business with someone else if they want to. In other words, we're very, we're confident in our own ability to give the right advice. But the reason why we might have 2 or 3 meetings is to get a really, really good understanding of what that client's objectives are, whether it be an individual or a corporate entity. For the simple reason that too many people make suppositions around what that client may or may not want. It's all well and good saying, how do I get the best return on my £20,000? But there are other factors that have to be taken into consideration. Liquidity is one. Access to capital, flexibility, what kind of returns they're expecting, how secure do they want the money to be, over what time frame do they want to invest. So, and there are probably 20 or 30 other questions that you can ask besides. So you've really got to get under the skin of the individual or the business, find out exactly what their objectives are, and then you can tailor a solution to meet the needs of that particular client.
And if I was to ask you now at this point in time, we're at the early part of 2011, and I said to you, right then, Sandra, I've got me £20,000. What would you think the best things to put it in at the moment?
I knew you were going to ask that question because you're going to hang me out to dry here.
No,
I would say that the answer to this question, Graham, is very much based on, and we're going to have to take a sort of a typical client because obviously there are going to be variations on this particular theme. But let's assume that an individual or a business is looking to invest £20,000 over, let's say, a 3 to 5 year period, is not looking to take too much risk, a very small amount of risk. And if I drew a line on a piece of paper and 0 was under the mattress and 10 was the 330 at Kempton, we'd be talking a 2 or 3, so bottom end of the scale. They were looking for real returns, flexibility, access to capital. I would be saying, and assuming there was nothing else that was going to create problems in terms of putting something together, whether, for example, large tax liabilities or cash flow problems. So all things being equal, the asset classes I would be looking to invest for long-term real growth at the cautious end of the scale would be a mixture of a number of things. I'd be looking to invest in commodities. They are almost a fail-safe. If you look back at commodities over the last 15 to 20 years, it's very rare they're not somewhere near the top in terms of overall return over a calendar year. I'd be looking at having a decent cash holding. I'd be looking at fixed interest corporate bonds and some UK and possibly US equities.
Yeah, see, it's interesting that you should say about commodities as well, because I often think that I always look at Brent crude and keep an eye on that, and that's performed fantastically if you could just put money in that over, let's say, the last year or two.
Yeah.
And do you think that will continue?
Yeah, because we are dealing with one asset class that is diminishing in terms of availability. Prices are rising, and they will continue to do that over the next 10 years plus. There are alternative fuel sources that are being looked into, but ostensibly oil, gas, natural fuel, everything else around the whole, but even precious metals, because of the unstable nature of certain markets and countries in the world in terms of war and famine and so on, there will always be a continued flight towards things like gold and precious metals. So you should always have commodities somewhere in your portfolio, definitely.
I mean, a mixture, but the thing is, I don't actually think, from my point of view, that the alternative fuels for cars, etc., will take off quick enough to feed the thirst that the world has for oil anyway. So it's going to continue to go on. I'm starting to sound as though I'm doing your job now, don't I?
It's very good, actually.
Yeah,
Do you
not
want
bad.
one?
No. You could afford me, I'm sure you could. I'm too busy at the moment.
Okay.
So that's good. So I've got Sandro in then. So what makes you different from anybody else then?
Well, it would be fair to say that if you heaven forbid, you lined up 10 financial advisors, financial professionals up against the wall and asked each of them what made you different. Now, I do a lot of speaking and coaching around the world, as you probably know. And I've asked that question of literally tens of thousands of advisors, and I've never once heard someone come out with a legitimate USP, unique selling proposition. They always say, well, I'm honest, or I provide a good service, or, you know, I've got a good product range. The two things I think that make me unique, number one is I'm the only advisor in the UK that has a guaranteed service charter that is underpinned by a fee agreement with my clients that only triggers when I am successful with their money. In other words, going back to the scenario of the £20,000, if a client says, I am low risk, we will maybe set a benchmark growth performance figure or target of 5% in that particular year. If I achieve 5% plus, I will charge a fee. And that fee will be no different to any other advisor. Typically, it will be 1% of the portfolio value. If I don't achieve that, I don't charge my fee.
Are you the only person that does that?
Yes.
Because it sounds really common sense to me. It's like if I'm not gonna get any money, then why should you get any money? So it sounds as though you're speaking a lot of common sense there. Nobody else does that.
No.
No.
No. And I'll tell you the reason why is they don't do that because every other financial professional wants to make money regardless. You know, they don't want to be beholden or held to ransom by the market. But the reason they have that fear is they're not prepared to do the service job that underpins the advice they give. Most advisors, and I'm not knocking anyone else, they do what they do and people have a choice as to whether they use them or not, so I have no issue with it. But one thing I know from my experience is that every other financial advisor I've ever come across is what I call transactional. They're interested in the, inverted commas, sale. They will give the advice, and the advice may be very, very good, don't get me wrong, but typically they'll plonk somebody's money in a managed fund and they won't see that client again for another 5 years. They'll come out with all the spiel about, you know, I'll come and see you every year. What we do is we provide monthly valuations, much like a bank statement. We provide up to 4 face-to-face meetings with clients every single year. If they want them, that's fine. If they don't, that's also fine. But we are great believers that if we are as good as we say we are at what we do, then we must be accountable financially for what we do. It's not simply a question of earning some commission or earning a fee for the transaction. It's far more than just that one part. It's everything that lies behind. You know, if you do business with somebody that gives you 20,000 to invest and they're 25 years old, you've probably got a 40-year relationship with that person before they retire. So you can't afford to just take your foot off the gas and say, there you go, you know, commodities will be great for the next 40 years, because the answer is they won't. They might be good for 2 years, then UK equities might be the place to invest your money. And we've proven time and time again, but that by regularly reviewing client portfolios and by financially penalising ourselves if we don't provide service, commercially, and I make no bones about this, commercially it's much more valuable to us in terms of client relationships than if we'd done it the conventional way.
Yeah, because I suppose it gives you focus, doesn't it? It gives you real focus.
Well, we're in it together. That's what
Yeah.
the client likes. The client says, well, you know, they don't have the answers to everything, and I make that very clear to people. You know, I'm not a predictor of the markets. If I was, with respect, I'd be on an island in Barbados and you wouldn't see me for dust. But so we don't pretend to be all things to all people, nor do we pretend to have the answers to everything. But one thing we do absolutely guarantee is we'll provide a level of service that will definitely squeeze the very last drop of profit and make sure that we hit those target performance figures for clients. And if we don't, we lose too. But the client has less of a problem than that than if we win and they lose. That
Yeah.
to me seems disproportionate.
I mean, what you said there's really interesting, so we'll get on to the more interesting stuff now. So, you've got some high-level clients as well, haven't you? So, how did you come by those then, and you know?
Well, in 1991, I looked at my business after, I beg your pardon, in 2001 I had a good look at my business and thought, you know, where's my USP? I'm competing with all the other IFAs in the marketplace. What is it that makes...
You need to really listen to this, because this is really good stuff, this. So remember this, because I've already heard this once already, but it's a really good story. You'll learn quite a bit here. Go for it.
So 2001, I realised that I was competing with a very competitive marketplace. And I sat back and thought, you know, what can I do to differentiate? And apart from the couple of things we've already discussed, I decided that I would choose one high-profile person to write to every single week. And it just so happened that I chose on that particular occasion, simply because he was profiled in Director magazine, because I was a member of the IOD at the time, Noel Edmonds, who was very, very entrepreneurial. He ran a business called the Unique Group. He was very vociferous in the foot and mouth crisis. He was part of the Countrywide Alliance and all sorts. So he was sort of being splashed all over the press at the time. I thought, you know, I'm just going to write to this guy and say, well done, you know, good for you for standing up and all the rest of it. So, congratulations for all the success you've achieved in business. So I wrote to this guy who I didn't know from Adam and said, basically, you don't know me, but this is what I do. I think I'm quite unique. You run the unique group, slightly tenuous link. How about a meeting? You call me if you're interested. Because I've always been a great believer in psychology, and I thought to myself, you know, I'm not going to go knocking on the door and ringing the guy every 5 minutes like all other financial advisors do. And out of the blue, 2 days later, I had a phone call from his secretary. Noel would like to see you. Went to see him, and my first question, Graham, to him was, what was it about my letter that prompted you to give me a call? And he said, you know what? There was nothing about your letter that was vaguely interesting. The reason why we contacted you is you're the first person in 22 years that I've been in business that's ever had the courage to write to me to ask for an appointment.
Wow.
He became a really good friend, and still is. He became a client. We ran London marathons and did all sorts of fundraising activity for the NSPCC. And what that convinced me at the time was that there was a very, very big gap at the top end of the market, because my perception was that this guy was, you know, in the spotlight, was very wealthy, was successful, must be getting advice from all sorts of people.
Yeah.
And actually the opposite was true. So now I have something like 250 clients just like him, that you will know, that everyone will know, very much in the public domain. Sports stars, celebrities, personalities, entrepreneurs, multi-millionaires.
I suppose, though, the real tip there for anybody watching it is the fact that you do need to sit down and reevaluate your business on a regular basis and look at where you can go and really focus on a special sector of the market, because that's what you've done. You've obviously sat there and said, these are my strengths, where do I want to be, and really, you know, fine-tuned it to hit those people at great success.
Yeah, I think you've hit an important nail on the head, Graham. You know, the word strength. A lot of people think, I cannot work in the business market because I don't know very much about business. I can't read a set of accounts. It isn't about what you know and what you don't know. It's about reaching out to people, and it's about providing good, honest, personable service to people who need it. There are people that range from individuals just started out in business to people who've been in business for 40 years that, you know, are wealthier than you or I will ever be. But they all have the same fundamental needs, somebody that they like, somebody they can trust, somebody that will get the job done. There's always a book to refer to, there's always someone to ask if you need help. And too many people are reluctant to take the first step because they're worried about the outcome. You know, many people, in my experience, fear success more than they fear failure.
Yeah, that's right, yeah, that's right. So let's just cap off then with what exactly you do then, Sandro, so we know what you can provide. We've talked extensively about this £20,000 that we can invest, but what else do you do?
Well, tax mitigation, running investment portfolios, whether they be standalone as part of a pension scheme. We do a lot of divorce work, and I would hope many of your members are not finding themselves in that situation, but we do a lot of that work because very often in a broken relationship, one individual finds himself dealing with money for the very first time. So then you'll be talking about absolutely every aspect of their financial planning. We do a lot of key man and shareholder protection coverage for individuals. We're one of the only firms that can get cover up to 50 million life cover and 10 million of critical illness. So many, many businesses out there right now want more cover, can't get it. And also 99 times out of 100, because we rebate commission and charge this fee, as I've been talking about, 99 times out of 100 will be cheaper than any existing policy that client has got. So very often we'll go in and just do the job of replacing cover that's already in place. Yeah. Loan protection to cover debt, for example. So pensions, investments, life cover, whether it be corporate or personal. We do a lot of mortgage work, both domestic and corporately, and we have a lot of wealthy individuals who very often act as business angels for companies looking to raise money. So sometimes we'll go and raise, you know, substantial amounts of money for startups or more established businesses.
Wow, that's great. Well, thanks for popping in to see us then, Sandro. It's been great meeting you. If you need to know any more from Sandro, or indeed you want to contact him, you can do through the business. Click on his profile and send him a message. And if he's not chatting to all the big stars and everybody, which I'm sure he'll have time for you anyway, he'll get in touch with you then. Sandro, thanks a lot.
Thanks, Graham.